You've seen the headlines. BlackRock, the world's largest asset manager, launched a Bitcoin ETF. Everyone's talking about the price of Bitcoin going to the moon. But what if I told you that's not the real story? What if the Bitcoin ETF is just a tip of the iceberg, a Trojan horse for a much, much bigger plan? A plan to completely rewire the global financial system. Today, we're pulling back the curtain on what BlackRock is really up to. And trust me, it's a lot more ambitious than just buying Bitcoin. This is their secret 2026 crypto master plan. First, let's talk about why the current financial system is so broken. Think about it. If you want to send money overseas, it can take days and cost a fortune in fees. If you want to buy stocks, the trade might seem instant, but the actual settlement, the real transfer of ownership, takes 2 days. They call it T+2. Our financial system still operates on a 9-to-5 Monday to Friday schedule, like it's 1985. It's slow, it's expensive, and it's riddled with middlemen, each taking a cut. Larry Fink, the CEO of BlackRock, has been very vocal about these inefficiencies. He sees a system crying out for an upgrade, and he believes technology is the answer. This is where most people get it wrong. They think BlackRock is just another big player jumping on the crypto bandwagon to speculate on prices. But BlackRock isn't in the business of high-risk gambles. They're in the business of infrastructure. They manage trillions of dollars. Their game is about making the plumbing of finance, the settlement, the clearing, the asset transfers more efficient. They don't want to just play the game. They want to own the game board itself. The Bitcoin ETF was the perfect entry point. It's a regulated, familiar product in ETF that introduces their institutional clients to a new asset class within a framework they already understand. It's the first step in getting everyone comfortable with the idea of digital assets. So, if Bitcoin is just the entry point, what's the main event? The answer lies in 2 key concepts: stablecoins and tokenization. Let's start with stablecoins. A stablecoin is a type of cryptocurrency designed to have a stable value, usually pegged one-to-one with a real-world currency like the US dollar. Think of it as a digital dollar. It combines the stability of traditional money with the speed and global reach of crypto. You can send 1 million digital dollars across the world in seconds for a fraction of a cent, any time of day, any day of the year. For an institution like BlackRock, this is revolutionary. It's the perfect settlement layer for transactions. Instead of waiting 2 days for cash to move through the old banking system, they can settle trades instantly using a stablecoin. This is why BlackRock invested in Circle, the company behind USDC, one of the largest stablecoins. They're not just betting on it. They're actively helping to build the financial rails of the future. But it gets even bigger. The second piece of the puzzle is something called tokenization. This is the idea that you can take any real-world asset, a share of stock, a bond, a piece of real estate, a work of art, and create a digital version of it on a blockchain. This digital version is called a token. Why is this such a big deal? Because it makes illiquid assets liquid. Think about trying to sell a small piece of a commercial building. It's a nightmare of lawyers, paperwork, and fees. But if that building is tokenized, you could sell a fraction of your ownership as easily as selling a share of Apple stock. Larry Fink himself said, "The next generation for markets, the next generation for securities, will be tokenization of securities. This unlocks trillions of dollars in value currently trapped in illiquid assets." For BlackRock, this means they can create new financial products, reduce costs, and offer their clients access to a whole new universe of investments. Their new tokenized fund, BUIDL, is their first major step. It's a fund that invests in U.S. Treasury bills, but instead of shares, investors get tokens on the Ethereum blockchain. This isn't a test. It's the beginning of the transition. Now, you might be thinking, isn't crypto the Wild West? Is it safe for these huge institutions? That's where regulation comes in. For years, the lack of clear rules has kept big money on the sidelines. But that's changing fast. All around the world, from Europe with its MiCA regulations to Hong Kong and even the U.S., governments are creating legal frameworks for digital assets, this isn't about shutting crypto down. It's about making it safe for institutional adoption. They're creating the guardrails that BlackRock and its clients need. This regulatory clarity is the green light they've been waiting for. It de-risks the space and paves the way for a massive inflow of capital. BlackRock isn't fighting regulators. They're working with them to shape a future they can dominate. So, here's the part they aren't shouting from the rooftops. While everyone is focused on the price of Bitcoin or Ethereum, the real opportunity is in the layers that will be built on top of this new financial infrastructure. Once you have a global, instant, and programmable financial system, what becomes possible? Think about AA agents that can manage investments and execute trades autonomously on-chain. Think about the PIN, or decentralized physical infrastructure networks, where things like energy grids or data storage are owned and operated by a network of users, with payments settled instantly via tokens. Or the creator economy, where artists and musicians can tokenize their work, receive royalties directly and instantly, and build a direct financial relationship with their fans without intermediaries. This new plumbing doesn't just make the old system faster. It enables entirely new business models and economies that we are only just beginning to imagine. BlackRock is building the foundational layer, the new operating system for finance. The true generational wealth will be created by those who build the applications, the new Googles and Amazons on top of it. So, what's BlackRock's 2026 crypto plan? It's not just about a Bitcoin ETF. It's a multi-stage strategy to become the central pillar of a new tokenized financial world. Step 1 was the Bitcoin ETF to get everyone on board. Step 2 is building the infrastructure with stablecoins and tokenized funds. Step 3 will be to scale this across every asset class imaginable, from stocks and bonds to real estate and private equity. They are methodically and patiently replacing the old, slow, and expensive financial plumbing with a new system that is fast, cheap, and global. By 2026, this won't be a niche experiment. It will be a core part of their business. The world's largest asset manager is telling you where the world is going. The only question is, are you paying attention? If you want to stay ahead of the curve and understand the massive shifts happening in finance and technology, make sure you subscribe to the channel. We go deep on these topics every week to help you navigate the future. Thanks for watching, and I'll see you in the next one.